Hello to everyone. This is one of our seminars here in Instituto Propague. My name is Carlos Ragazzo. I am the chairman of the committee of Instituto Propague. And I'm here today with Professor Nydia Remolina. And I'm very thankful that she has accepted our invitation to speak here. The topic that we're going to discuss today is open finance in Asia and Singapore in general. And this is a very, very, very hot topic for us Brazilians, as probably all the audience knows. We are under the discussion for the open banking regulations right now. Second phase has just begun. So we are having the discussions trying to understand what is happening overseas and to see what we can grasp from their experience into our system to see whether this is the same or it's not the same. So today, basically, just to introduce you, she's a very distinguished member of our academia. I read all of her papers. I follow her on LinkedIn, and I'm a great fan of hers. And I'm going to introduce you to her so we can have a presentation on the topic today. So just to give you the highlights, because there's a lot of things to say about Professor Remolina. She is a lawyer with more than 10 years of experience in the financial services industry. She's been in law firms, academic institutions. Nowadays, she's a research associate at the SMU Centre for AI and Data Governance, and she's an adjunct faculty at Singapore Management University. She has been an instructor for the Global Certificate Program, which is jointly organized by Harvard Law School and YOSCO. And she has also acted as senior advisor to the OECD, and she has worked previously at a law firm, Sullivan & Cromos, New York office. She has a master's in science of law from Stanford University, and she graduated studies in economics, finance, and computer science. Professor, then again, many thanks for accepting our invitation. It's a pleasure for us. I'm not that interesting, so I'm going to leave the floor to you for your presentation to show us what's happening in Singapore and Asia altogether.
Thank you so much, Carlos, for the very kind introduction. Thank you so much to Instituto Propague and Joanna and all the organizers that made this webinar possible. I'm very excited to be here today with you all and I'm looking forward to the discussion after the presentation. I'm sure that we will have a lot to talk about. In this particular presentation, I would like to talk about the experience of open finance in different countries that are not necessarily following the same approach as Brazil regulators took in this particular topic. I will focus in some jurisdictions in Asia, and particularly Singapore, where I'm based, and other countries in the region that follow different approaches. It's difficult to put all of them on all the region in one single approach. We will see throughout the presentation that the approaches differ, and it's difficult to say all an entire region is following the same thing for open finance. But it's important also to recognize that even independently of the model and the approach taken for open finance, different models could be for a particular jurisdiction successful in the implementation. So it's good to see what have been the pains and struggles in specific jurisdictions to learn from those experiences. And that's where I see the value of looking into the different models for open finance. So let's start with the presentation by just giving a very general concept and the general background of what is open banking or open finance and what are the implications of it. Most of you may know by now that open finance or open banking is this type of interaction between traditional financial institutions or traditional players and developers, tech developers, fintech companies, other type of companies, or even other financial institutions, other traditional financial institutions. How they interact, these two parties in the same chain, they interact through the use of open APIs, open application programming interfaces. These application programming interfaces are basically the bridge that connects these two parties. And the second party, the party that is the developer or the other financial institution or the fintech company, is interested in having access to a database or to the infrastructure of the first party in the chain in order to develop something, an application, a new service, a product based and leveraging on what the first party has in the database or in their infrastructure to offer that new type of service, app, product to an end user. This end user interacts differently in the chain depending on how the entire product is designed and the interaction between the two parties. In some cases, you will see that the end user knows that is interacting with two companies, or two companies are involved in the development of this end product. But in other cases, the end user only has an interaction with the third-party provider or the second company in the chain or in the infrastructure that we talked about. And in other cases, the end user interacts more with the first party in the chain because it's the company in which the end user has their data available to share and to open the access to other companies. This is not a concept that is unique and that was invented in the financial services industry. This is something that works in other industries, and tech companies are used to work with these type of arrangements and to offer in marketplaces open APIs. Some examples in the tech industry are Yelp. Yelp is an app that you can use to see reviews of restaurants. So users basically post their opinions on a restaurant in this app. And when you look into the opinions of those restaurants, you will be able to see the exact location of the restaurant in a Google map. Without open APIs and this type of interaction between two parties, Yelp and Google Maps, you wouldn't be able to see the map on the app, or Yelp would have been obliged to develop from scratch a map and a geolocalization type of implementation in their application in order to show the map and the exact location and how to get to that location in their app. So with the open API offered by Google Maps, Yelp can just leverage on that service that Google is offering and that access that Google is offering to third-party developers, being the third party, in this case, Yelp. That is one very simple example on how this type of interaction between two companies work. And specifically, the use of open APIs, how are they being used in the tech sector? Facebook for Developers is a very common and very known marketplace for open APIs that Facebook offers to third-party developers that are interested, for example, in developing ads or advertising certain type of things based on the data that Facebook gathers and controls in terms of data protection from their users. So with the proper consent, by giving the proper consent to the third-party developer and Facebook, users are able to share their data, and these third-party developers are able to know the data that is controlled by Facebook in order to develop these ads or these services, depending on the type of open API that Facebook is offering in these marketplaces. Based on these ideas and this type of interaction between two companies, some regulators in the UK started to think about, within the framework of an investigation for antitrust and competition in the digital payments markets, they started to think about ways of promoting competition, how to get more actors to develop products and services in these markets. And that's when the conversation on open banking, that now it's called Open Finance, started in the UK. Then PSD2, the European Commission and the European Union started to think about ways of modernizing the Payment Service Directive in around 2013 in the European Union. And they took this idea from the conversations in the UK about open banking. So that's where they started to think about the proposal for the second directive of payment services, digital payment services. And that's when PSD2 came to life. And in 2016, it was approved by Parliament in the European Union. And the directive was then designed for this thing that we call today open banking. They became the pioneers in the implementation, but the models have changed radically around the world because some regulators are interested in learning from the experience in the implementation in the UK and the European Union. We will talk in a minute about these other models. What are the promises and challenges that regulators around the world, and you will see that reflected on the models, have seen in open banking? Promises to promote competition. As I said, this conversation started because some regulators wanted to boost competition in specific markets and digital payments in the beginning. And that was one way of providing a solution on that. What happens in a jurisdiction that this is not a problem? You don't see a problem of traditional actors concentrating the market. Some jurisdictions might not see that problem in digital payments, so that probably is something that is not seen as an advantage or as a strong advantage as in other jurisdictions. That would be the example of China. In China, the non-traditional actors actually are the ones concentrated the big part of the market share of digital payments, not the banks. So it's the total opposite situation as in the European Union or the UK, at least when these conversations on open banking started. So probably this promise and this advantage of open banking that some regulators see is not that applicable everywhere. That is something that needs to be taken into account when we are discussing what is the best model for a specific jurisdiction. Not all of this is applicable everywhere. To facilitate innovation, this interaction between the developer and the traditional financial institution might help traditional financial institution and consumers in general to have access to new products and services that those traditional actors are not interested in developing or is not targeting their niche or their markets, the markets they are interested in participating in. So that could be something good for the financial system and for financial consumers overall. To enhance customer experience or user experience is another thing that comes along with innovation in most cases. To promote financial inclusion, that's something that is also being explored in regions such as Africa, obviously Latin America, where non-traditional actors could help to boost financial inclusions in the sense that it would be a tool to be used to increase the number of persons that are using digital payments or that are opening a bank account where financial institutions or in markets that financial institutions are not interested in offering services and products, but third-party developers could be. These fintech companies, online companies, tech companies that are interested in developing those type of products could be a response to financial inclusion needs by using open APIs and leveraging on the data that financial institutions control. To enhance AI capabilities and data openness, just to increase the access to data and enhance data portability for financial consumers is something that is good not only in the financial sector, but in other sectors that are data-driven and that are basically developing products that are leveraging on data and based on the data that some companies control. That enhancing data portability will be good for if followed the right way with the proper consent and the proper guarantees and requirements in terms of regulation will be good for consumers at the end of the day. But this type of interaction between the two companies and the open banking scheme can also bring some challenges that the regulators need to address. Some of those challenges that have been pointed out in different jurisdictions that have been discussing these topics are consumer protection type of issues, particularly the third parties are not adequately regulated. Some of them are non-traditional actors, so they are not licensed in all jurisdictions that are starting the conversations on open banking and open finance. So it's important to see that if they are performing or offering services that should be regulated, probably they will need to apply for a license and they should be required to follow certain requirements. So consumer protection is one challenge. Competition issues, because the platformification of financial services could bring some new ways of concentration in these markets. That's something that China, for example, is witnessing in digital payments. So now the Chinese regulators need to implement, or are trying to look into ways to implement some requirements that kind of counteract these new ways of concentration in certain markets, such as digital payments and the banking sector that is highly concentrated right now in the non-traditional actors. Data privacy, because we are talking about data portability and enhancing data access. So it's important to keep controlling and implement and enhance the requirements that will protect privacy of the end users. Data governance, and how is the responsibility and accountability of the two parties that interact in these type of schemes is something that also needs to be discussed, and in some jurisdictions needs to be coordinated with the data protection authorities. It's something that is not only within the framework or within the scope of financial regulators, but also involves other authorities. Cybersecurity, especially of the third-party providers in jurisdictions that are not regulated or regulated with different standards than traditional financial institutions. Information externalities in an enhanced AI ecosystem, particularly in those jurisdictions where open banking, from a regulatory perspective, is not considering reciprocity. So it's not considering the possibility of open the data access and increasing data portability in both ways, from traditional financial institutions to non-traditional actors, and on the other side, to the other side. But also, some jurisdictions are too much focused on opening the data, the access to data from traditional financial institutions to the non-traditional ones, but not the other way. So in those jurisdictions, that lack of reciprocity is going to be at some point a challenge for some of the scholars that have been analyzing the different models in the different jurisdictions. And what are those regulatory models? I have divided the regulatory models into three groups. First, the market development approach, the compulsory approach, and the cross-border sandbox approach. What is the first one? The market development approach basically is the approach in which open banking or open finance is not mandatory. So it's not required, it's not an obligation of traditional financial institutions to open their data to the third-party service providers or the third-party developers. Within this group, you will see two types of jurisdictions. First, the ones in which the regulator acts as the facilitator or the orchestrator of open banking. So the market development approach or the voluntary approach doesn't necessarily mean that the regulator is not interested in open banking or open finance. On the contrary, the facilitator approach and these countries that orchestrate the implementation of open banking under a voluntary approach are very interested in having success in the implementation of this type of scheme. One example of this type of jurisdictions is Singapore. Singapore, the Monetary Authority of Singapore, is not requiring a mandatory approach to open banking, so it's not required traditional financial institutions to open their data to third-party service providers. But in the voluntary scheme of open banking, MAS has a unique strategy for the implementation of an open API strategy in the country. So the Monetary Authority of Singapore has an open API registry for banks, traditional banks that want to promote and publicize their open APIs in this registry, and for tech companies, fintech companies, and other third-party service providers, or even other traditional financial institutions, to go to that registry and see what is available in the country. I will go into the details of the Singaporean approach to open banking in a minute, but it's quite interesting to see that in countries such as Singapore, this voluntary approach, but with the active role of the facilitator from the regulator, the country has been able to achieve high number of open APIs in those markets. Not the same case in other countries or jurisdictions that have decided to implement a mandatory approach, but the number of open APIs is not as high as in Singapore. So it's interesting to see those differences, because you might think that the mandatory approach is the best in terms of number of open APIs available in those markets, and not necessarily that is the case. The other group of jurisdictions in the market development approach is the no intervention. Those regulators that decide to basically do nothing and just leave the financial institutions and third-party providers to implement the strategies, commercial strategies for open APIs, but they are not interested in facilitating or orchestrating an implementation in open banking. I put the United States here, but interestingly, some weeks ago, they announced that they are interested, some regulators in the United States, particularly the CFPB, the Consumer Financial Protection Bureau, which is the federal authority for consumer protection in the United States, is interested in exploring still a voluntary approach, but taking a more active role as a facilitator of open banking implementation. So the United States might be changing their strategy to the facilitator, but still voluntary approach. The compulsory approach, the second big group of jurisdictions, are the ones that have decided to make it an obligation for financial institutions to open their data when the user or the financial consumer gives consent to the third-party service provider or to the other company interacting in the scheme of open banking. The approaches in the compulsory model are different. They vary depending on the jurisdiction. So it's really hard to compare them, because probably the only common thing that they have is that it is mandatory for some institutions to open their data. But the API standards are not included in all models that are part of the compulsory approach. The governance framework of the data and the accountability of each party is something that is not regulated in all of them either. The regulation of third-party providers is something that is not considered in all these regimes. Some jurisdictions only oblige financial institutions, for example, to open their data in this type of approach, but they don't address the issue of licensing the third-party providers and which third-party providers should be licensed. This is something that is part of other conversations in those regulatory regimes. So not all of those jurisdictions follow the same approach and the same type of model in the compulsory approach. Also, the type of data that is exposed and that is shared in open banking initiatives in the compulsory approach is different. Some jurisdictions have decided that only banking data, other jurisdictions are taking a broader approach, and that's why some of them are speaking about open finance and not only open banking. So that is also a difference. And the last difference would be the regulatory authority that is in charge of implementing the open banking model in jurisdictions. In some of them, the financial regulator or the regulator in charge of the particular market in which open banking will be implemented is the one in charge of implementing the model. But in other jurisdictions, it's not even the financial regulator, but the antitrust authority, or in others is the data protection authority. So it differs depending on the jurisdiction. And the cross-border approach is an approach that involves different jurisdictions. So traditional financial institutions from one place, from one country, interact through open APIs with third-party developers from other countries. This is an initiative led by, for example, Singapore. The UK has another one that is quite similar, but I will be talking about the Singaporean one. It's called APIX. The regulatory models, as I said, this is just what I just mentioned. They differ depending on the details are very different from country to country, and you will see that some of them include the one type of data, but not all data that is controlled by financial institutions. Governance frameworks are different. The API standardization is different, so it's very hard to put all of them in the same bag. Some evidence about these different models and how they have worked. In the European Union, the UK, probably you've seen many news, and the progress of the implementation hasn't been as swift and as fast as regulators would have imagined in the beginning of the discussions. Why? Because in some cases, the API standardization conversations were complicated with the industry. Another thing is that PSD2 is a directive, so it's being implemented in each jurisdiction within the European Union with slight differences. So that's something additional. That's a layer of complications that needs to take into account when you are talking about the implementation of open banking in the region. At the end of the day, if you see the number of open APIs, you will see that they don't have banks in the European Union, don't have as much as open APIs available that are complying with all the requirements that they need to comply under PSD2 and the open banking framework in the UK. If you see, for example, banks such as BBVA, one of the pioneers of open banking strategies in the European Union, one of the banks that started this even before and are convinced in the value of this even before conversations about PSD2. They have been always supporters of open banking schemes and this strategy as an important part of the digital transformation in the European Union financial sector. Even for those banks, hasn't been as easy to put as many open APIs following the requirements of PSD2. If you see BBVA, the example I was mentioning, they have around 11 open APIs available in their marketplace. And if you compare that with other banks, for example, in Singapore, one of the banks in Singapore is offering 151 open APIs in their marketplace. Is the bank worldwide that offers the largest open API marketplace. So why those differences in a country or in a jurisdiction that decided to implement a mandatory model and in another jurisdiction that decided to implement the voluntary model? In Singapore, the total number of open APIs available in 2020 went almost to 1,700 open APIs. So it's a very interesting number for a country that has decided to implement a voluntary approach. But the key of the success in Singapore has been the role of regulators. The Monetary Authority of Singapore, first, is the only regulator for the financial sector. So they don't have to coordinate with other regulators. And these open APIs are not only for the banking sector, but for other industries within the financial system. So that's why it's a real open finance strategy, but following the voluntary approach. And secondly, first, the first reason for the success, if we want to call this a success, in the implementation of open banking, the first one I said, they are the unique regulators, only one regulator in the financial sector. Second one would be a coordinated strategy in terms of data protection and data portability with the data protection authorities. That would be the second one. And the third one is the regulation of third-party providers and following a risk-based approach. In the European Union and other countries that have decided to implement a mandatory approach in open banking, even data aggregators are regulated and they need to be registered in these open banking initiatives. And that has been a struggle because not all companies are ready to implement the standards that are required in those legislations or in those directives, in those rules. That is something that was at the beginning a struggle in the European Union, but they were okay with that because regulators even said, we prefer this to be super safe, but not risk consumer protection and other things. Singapore, on the other hand, said, we are taking a more risk-based approach. So we are saying that some activities that are performed by these third-party service providers don't require the most strict regulatory requirements. What would be those? For example, data aggregation is something that don't necessarily require always a license. Or if the third-party provider is only handling data, they will need to comply with data protection rules as anyone else in the country, but not a financial services license with the financial regulator. Only if money of the customer goes through the company, that's when they will be required to ask for a license. In South Korea, this is another country that followed the voluntary approach, and they have also expanded the scope of open banking to other type of data. So they have an open finance strategy. They also have very interesting numbers because almost all banks in the country are part of the scheme. And fintech companies, mutual funds, service banks, security firms, credit card companies, and even the Korea Post and other companies or governmental companies that are interested in joining the scheme are part of the conversations on open banking, which is something that is very interesting. One unique thing about South Korea is that they launched this thing called My Data Korea. And businesses that want to aggregate data need to ask for a permit. It's not exactly a license, but they will need to be authorized to have a My Data business type of approval or something similar to a license, but it's not exactly a financial services license. And those type of businesses are the ones that are allowed to act as third-party service providers. I wanted to give another example besides Singapore of open finance strategies in the region that are also following the voluntary approach, not the mandatory one, with certain degree of success in the region. This only, just for informational purposes, is the last number of APIs per sector, disaggregated depending on the sector, that are available in Singapore. So as you can see, some of them are part of the banking sector, other open APIs are for capital markets, other for insurance, and other for payments. And if you see the graph also is showing which of them are informational and which of them are transactional. As I said, some third-party providers are interested in having access to consumers' data that is controlled by financial institutions or by traditional actors that is non-transactional. So, for example, that would be data that it's going to be used to give financial advice to someone or just to show in a dashboard. That's a very common app in almost everywhere that has data aggregators for the banking sector. You have these apps as Mint, for example, in the United States, that shows in a dashboard the different accounts that you have, the checking accounts or savings accounts that you have in the entire financial services industry, and you will be able to see easier how much you're spending per month and this type of analysis. That's a very common example of an informational type of app that is not handling transactions for you, that is not facilitating transactions for the user or doing anything that is related to transferring or handling money of the user. The transactional third-party providers are the ones that have access to the infrastructure of the traditional financial institution or the data that the financial institution controls in order to make transactions in a specific market. So this is like the breakdown of the numbers of open APIs. And in Singapore, I already mentioned that data aggregators don't have to be licensed. These third-party service providers are not licensed in the country, but doesn't mean necessarily that the government is totally absent or the public sector is totally absent from overseeing this type of activity. Why? Because even though the apps and the developers that provide these apps for financial planning or giving you the dashboard to see all your saving accounts and checking accounts or other type of data that you have in the financial sector, all of them need to go to the data aggregator that the government put in place. So the open banking strategy or open financing strategy in Singapore includes an initiative run by the public sector called SG Findex. SG Findex is the data aggregator, but not the one that is exposed to the public. It is exposed to the third-party developers that actually aggregates the data. So it has like a layer in between the API, the open API, and the financial planning app and the third-party developer. That's like a layer of protection in terms of data governance and data privacy for the scheme. SG Findex is not able to see the data. It's just like the bridge that connects the two parties within the scheme. In addition to this, in Singapore, also it's implemented the SingPass since years ago, which is the digital identity system for the country. This obviously facilitates the implementation of open finance because third-party service providers are able to identify customers just by obliging everyone to log into SingPass, the digital identity system, and everyone is using the same type of online onboarding. Financial services companies and government companies, or government institutions, and other type of companies that will need to offer online onboarding for any type of service. So that is something that facilitates things and facilitate controlling things such as anti-money laundering requirements and consumer protection when it comes to online onboarding. This is just an example on how this data aggregator functions in practice. Some banks, for example, DBS, this is one of the largest banks in Singapore, have implemented these financial planning apps. So in this case, is a bank, a traditional financial institution, the one that is developing this dashboard as Mint does in the United States, Mint being a fintech company or a tech company. But in Singapore, some banks have entered into these new type of services that are more data-driven, and they have been exploring these type of offerings for consumers in the financial sector. The regulator for third-party service providers in Singapore is obviously because Singapore doesn't have a regulatory regime for open banking because the scheme is voluntary. The regulation of third-party providers is in other regulatory frameworks in the country, being the most important one, the Digital Payment Service Regulation, which is the Payment Services Act. And the Payment Services Act is the one that says that service providers that process only data are not required to have a license under the Payment Services Act. So that is something important to take into account when we talk about the regulation of those third-party providers in the scheme of open banking. I will be very happy to hear the questions from the floor, and I hope this overview is useful for the discussions that you're having in Brazil right now. I would like to hear the questions from Carlos on the floor. Looking forward to our discussion. Sorry if I took some more minutes than we planned previously. It's really hard to summarize everything that is happening in the world in open banking. Thank you so much.
Thank you, Nydia. Actually, you did a fantastic job. Don't worry about the 10 minutes. We will have some time for us to discuss. Just to begin with a question that came from the audience. and from a good friend of mine, actually, Glacos, he's actually worried about whether there's some sort of a regulation involving APIs in order to broaden the usability of APIs in Singapore. And if you see, this is a best practice or an imposed regulation, something related to that, which can, to a certain extent, what kind of approaches would be applicable to make APIs, sharing more efficient?
That's an excellent question, because that was one of the struggles and one of the pains in the implementation in the European Union, the API standards. Singapore said, we are not going to put this in a regulatory framework. So API standards is something that is not controlled by MAS. They are not interacting with the industry in these conversations, but the industry itself started some of these debates some years ago, and they put together something that is called the API Playbook. But this was an initiative by the Banking Association. The Banking Association and the largest banks in Singapore were the ones interested in boosting the open banking ecosystem. And with the encouragement of the Monetary Authority of Singapore, they decided to put the API Playbook, but it's not regulation. However, all third-party providers follow these standards, and they were part also of the conversations. So that's something that is the approach in Singapore. In South Korea, for example, the open API, the API standardization was something that the regulator wanted to control. So they started from the government, the conversations and the debate on the standardization, but at the end they realized it was going to be very hard for them to be part of that debate, and they let the industry to develop with the tech companies those standards. So they are now in those discussions. It's one of the challenges of my data, which is the open banking strategy in South Korea in terms of implementation. In Singapore is the API Playbook, the standard framework, but it's not regulation. So it was put together by the Banking Association.
And I was from your presentation, there came a few questions in my mind, but I think that the most that I would like to hear you from is the kind of relationship that the data protection officer and the regulator in Singapore, or even in Asia, if you could just develop a little bit. Because for us, just to give you a little, I'm sure you're following what's happening in Brazil, but just to give you a little glimpse of what's happening here, the data protection agency is quite new. It's actually 1 year old, something like that. So for them to be able to contribute now, it's going to be very difficult. This is something that they have to acknowledge the financial sector. This is the major movement which is happening data protection wise as a regulatory movement in Brazil. So it would be nice to have some sort of experience from overseas to see, were there any tensions, were there any situations in which there were a conflict? They actually work well together, and if they did, what actually was important, was paramount for that relationship to develop?
That's a key question, I think, everywhere. In Singapore, I think this is something that is probably unique from some jurisdictions in Asia. The way we see data protection is a bit different, because privacy is not something that is related to human rights, as is in the European Union, for example, which doesn't mean that it's not important. It is very important for the Data Protection Authority, but it's not a constitutional right. And the approach to data protection is more business driven, in the sense that the regulation is there to solve market failures and to make business sustainable in terms of creating trustworthy data spaces. So that is the main goal, rather than, I'm not saying that this is the approach in the European Union necessarily, but in some of those tensions that you were mentioning before, is in some countries is, for example, because data protection authorities are more interested in punishing behaviors that were unregulated and they went out of control probably before, because of the lack of regulations. That is not the approach in Singapore. So the relationship between the two the two regulators is very well coordinated and following the same type of a strategy as a country, which is developing business in a sustainable manner by creating trustworthy data spaces. In this case, for the financial services industry, this is something that is evident, and you can see that in the development of the open API, the open banking and the open finance strategy in Singapore, but also in other things that even are more high in the top priorities for the country in terms of a strategy, which is artificial intelligence. In artificial intelligence, the financial sector is obviously developing some guidelines and some principles that financial institutions and fintech companies need to follow when they are trying to deploy AI use cases. And they are working, MAS, the financial regulator, is working in a very coordinated way with the Data Protection Authority, and both guidelines, the one that was produced for the financial sector and the one that was published for other industries by the Data Protection Authorities, are following the same type of principles. So you don't see those clashes of interests between the two authorities, I would say. In terms of the specific regulations, you already know that MAS is not putting into place and doesn't have a regulatory framework for open banking or for privacy issues in the financial sector, but cybersecurity and technology risk is something that is regulated for the third-party providers that will need to comply with a license or apply for a license. And in terms of data protection, the Data Protection Authority is the one regulating the data portability requirements and what type of consent and what type of terms and conditions and other requirements need to be put in place in data portability cases. And open banking and open finance is one of those cases of data portability. But the work between the two authorities is highly coordinated when they try to implement this type of policies and regulations.
You were mentioning in your presentation, right now actually answering this last question, you mentioned that there is a demand side to open finance. And over here in Brazil, I think one of the major challenges that we have is to convince people to consent, to give consent for the information to be used in order for them to receive the products. And I saw, for instance, that in Australia, that was a big thing as well. So the regulator is actively trying to engage people in order for them to be able, so they're making credence for institutions that will be able to participate in open banking to lend credibility to those institutions for people to feel a bit more safe to share their information to them. So was there any, because we were discussing a lot about the supply side and the APIs, the banks, and what about the demand side in Singapore? Did you see any sort of campaigns in order to make it aware for people so that they would share the benefits of sharing, any sort of initiatives relating to that part?
Definitely. For example, the Monetary Authority of Singapore organizes now is more diversified throughout the year, but before the pandemic, it used to be this major event every year called the FinTech Festival, and more than 60,000 people attended this event every year. And this event was not only to share and to interact with regulators from all over the world in discussions and companies from all over the world in discussions about adequate policies for the financial sector, but it was also to promote what Singapore was doing in terms of digital transformation in the financial services industry for everyone. So this major event gathered this, obviously the interest also of consumer associations and consumers in general. And it's a way to promote also and to launch these big initiatives that are not necessarily part of our regulatory regime, but they can add some value in that process of digital transformation of the financial services industry. And that sometimes consumers don't figure the benefit and what they get out from what they get from from this type of implementations. Another strategy that I've seen that Singapore has been following, not sure if this was targeting the awakening of the interest of financial consumers necessarily, but definitely has worked in that way, is the promotion by the government and this implementation of SG Findex, the data aggregator controlled by the government, but that adds like a layer of interaction between the financial institution and the app and the third-party developer that is offering a service for just seeing all your information, your financial information in one place. Having the government there is one an additional layer of protection for consumers, so that obviously make the consumers awakes the attention from consumers in the country, because the government is participating in this. And additionally, the other type of data that is that the consumer is able to aggregate in these apps is something that is interesting for consumers as well, because probably they don't see much value in seeing in a dashboard the or the saving account information that you have, but they see some value in seeing that and how that information translates into having a better retirement plan, and the retirement information it's controlled by the government and was added to this initiative. Also, the information from the tax authority was added to this initiative as well. So I am able to see in these financial plan apps the information not only from the financial sector, but also from other actors that have important information that is valuable for the consumer to have, if the consumer is interested in receiving advice for planning financially a better future. So that's another thing that is interesting in Singapore, in this type of role of facilitating the scheme of open banking and open finance.
And we cannot end this without me asking you. One of the major things that we're seeing now is this process of competition, which is expected in Brazil because of open banking. So the banks have access to most of the information. They have 80% of all the financial products, so on and so forth. Everyone knows about it. So every process related to competition, it takes a while. So this is a two-pronged question. The first one is, and it comes from Joanna, do you see in Singapore third party coming from outside of the banking sector, or from the banking sector in different but smaller players? So this is the first one. And the second one, since Brazil is such a big country and we do have this competition, everything's pretty much focused on a local strategy, a national strategy. And as I see from Singapore is a small country in a region with a lot of countries with tons of people. So has it developed an international strategy in order to be able to be more scalable? So it could, the financial products that come from Singapore, and I know this is a very, very heavy place for capital markets, so it's a very important place in Asia, in order to be able to, to expand to other countries and to make the Singaporean places, the Singaporean banks, and Singaporean financial activities more competitive overseas?
Yeah, two very interesting questions. Regarding the first one, yes, non-traditional actors that are not financial institutions and not licensed as any type of company that is under the oversight of the Monetary Authority of Singapore can implement and offer services as part of the open banking scheme. Not every type of service, it depends. If this is a service that requires a payment license, that company will need to apply for a payment license. Most fintech companies that are, for example, asking for access to the traditional banks in order to make transactions on behalf of their clients, or they are offering these type of platforms that facilitate transactions for clients in marketplaces, or by using digital wallets, this type of things, those type of companies will need to apply for a license if they handle the monies of the client. But Those companies that are only handling data are not required to have a license under the Payment Services Act. These companies in other jurisdictions are regulated as payment service providers or have to be registered, for example, in the European Union as aggregators or as a payment initiators in some of those cases. That is not the same it's not the same scenario in Singapore. So it would depend on what exactly the company does, but it's a very local debate and local conversation. When you are asking me if they are providing a financial service, it would depend, because in PSD2, some of those same activities are considered financial services or are considered something that triggers the requirements of registry as a third-party provider under PSD2. But in Singapore, that same service is not required in the company to have a payment license or any other license regulated in the country. One example, just to give in practice, is Google Pay. Google Pay in Singapore is just facilitating the transactions by using open APIs offered by 3 of the major banks in Singapore: Standard Chartered, OCBC, and DBS. These 3 banks operate with Google Pay. And Google Pay facilitates the transaction by using the open API that these 3 banks offer on behalf of the clients and with the consent of the clients. This is an example of a transactional open API that opens the access of the infrastructure that the banks have in place with the consent of the client. But Google is not handling the monies of the client. So that is why, in this case, Google Pay is not considered a company that is required to have a payment service license in Singapore, and they don't have one. In the European Union, the case would be probably different, and they probably would need to be registered for this type of service as a payment initiator type of service under the PSD2 directive. So it's different depending on the jurisdiction. But in Singapore, that is called the risk-based approach of the Monetary Authority of Singapore. This means that Singapore, in terms of financial services, have decided that some activities are not as riskier as the Monetary Authority thinks, so they won't require for now a license for those type of services. Which doesn't mean that it is not going to change in the future. We don't know. But for now, the risk-based approach consists in this sector and in cryptocurrencies, in crypto assets, in other type of services, cloud computing, and other type of discussions in terms of digital transformation, AI, and deployment of AI in finance. The risk-based approach is the way to go for the Monetary Authority. And regarding the second question, on the transnational and cross-border type of initiatives, Singapore implemented something called the API Exchange. This is an initiative that was led by the Monetary Authority of Singapore with the World Bank, the International Finance Corporation, exactly, and the Asian Bankers Association. These 3 institutions decided to just put in place a marketplace for open APIs of traditional financial institutions from different jurisdictions in Asian countries, and additionally offer this platform to fintech companies from these countries in the region in order to develop products and services. And within this initiative, basically a fintech company or a traditional financial institution needs to sign up, post a problem, so post a necessity that they have if they are a traditional financial institution. That is the common thing and the common way to go. If it's a fintech company, what they post is something that they are thinking about developing, but they need the access to the data from a financial institution. And they get connected with the help of the platform with the traditional financial institution, and they develop the service and product with the prototype within this initiative That's why I called in the models, in the three model, the cross-border sandbox approach, because regulators from these different countries are also participating in conversations in the platform in order to guide companies or offer them the sandbox if they need to develop something that needs a regulatory exemption of some sort. So that's why I call it the cross-border sandbox approach. The name, is API Exchange, or APIX. That's the name of the platform.
Well, Nydia, we're reaching the end. Right 11 a.m. here in Brazil. It's 10 p.m. in Singapore, isn't it?
It is.
So it's getting late for you. I'll let you rest. But first, I would like to thank you so much. You were very generous to share your thoughts in Singapore and all the other countries. I would invite you to, whenever you can, to come to Brazil, whenever we finish this whole mess, and we can discuss over what's happening here. And I was very happy that you accepted our invitation. I thought it was great. I'll just leave the floor to you if you want to have one final last remark.
Thank you so much for the invitation again. Hope to see some of the participants or the organizers in a future FinTech festival in Singapore, hopefully not online, but face to face, and welcome you in the country. I'm looking forward to receiving additional questions you have. I can share the presentation if you want to have it on the website, or you want to send them to the participants. That will be fine for me. And I'm always available on social media, and my email account is available for everyone that wants to keep discussing these interesting topics. And I will be certainly following the implementation of open banking and open finance in Brazil, which is one of the leading countries in the region in Latin America, with this very interesting approach to the digital transformation of the financial services industry.
Many thanks, Nydia. For the people watching us now and later, just follow us and institutopropague.org.br, and we'll have plenty more on open banking and other financial regulations innovations in Brazil. Bye-bye. It was a pleasure.